A very warm good afternoon, everyone. Thank you for joining this important technical session, which was co-curated in partnership with Axion on digital transformation of financial institutions catering to the informal sector, responding and preparing for changing customer needs. The session will be moderated by Mr. Shantanu Mukherjee, Regional Program Manager, Asia Axion, and the panelists for the session are Mr. L.V. Murthy, CEO, Dwara KGFS, Ms. Sucharita Mukherjee, CEO, Kaleidofin, Mr. Thiru, COO, Kinara Capital, Mr. Nishant, co-founder, Lakshya. We look forward to a very engaging session, and with this, I hand over the charge to Shantanu.
Thank you, Priyamvada, and good morning and good afternoon to all those of you who are joining, and thank you very much for joining the session. Let me start off by saying that the COVID has devastated the lives and livelihoods of millions and millions of people. The World Bank projects that the pandemic will push more than 100 million people into poverty, extreme poverty. Some of them will take years to recover from the same. The vulnerable populations, as we all know, direly needs financial tools like savings, credit, insurance, to rebuild their livelihoods and build resilience to challenges of today and those that are supposed to come. Pandemic is not going away in a hurry anytime soon. So therefore, financial institutions has a very critical role to play in supporting the most vulnerable and equipping them with tools they need to enter the digital economy. So to effectively support their clients and reach new population in an increasingly digital environment, the financial service providers particularly need to be digitally transforming themselves. Unfortunately, many of them operate in a legacy environment, making it much difficult to transform themselves. But FSPs must find a way to digitally reach and interact with their customers at scale and use their data for more efficient credit management, product designs, build more flexible core systems that support adaptability. This requires FSPs to coordinate across various aspects of their businesses to achieve a fully digital enabled business model. Joining me today in this panel are leaders of 4 organizations who are deeply rooted in financial inclusion and doing some wonderful work to bring the underserved in the fold of digital financial inclusion. As Priyamvada mentioned, my name is Shantanu Mukherjee. I'm the Regional Program Manager for Asia at Axion Global Advisory Solutions. Axion is a global not-for-profit committed to creating a financially inclusive world with a pioneering legacy in microfinance and fintech impact investments. Axion Global Advisory Solution combines decades of on-the-ground experience with insights into new technologies to help institutions overcome challenges to drive financial inclusion at scale. With a presence in North America, Latin America, Asia, and Africa, our experienced global team delivers advisory support through integrated service offerings and products, all focused to deepening the impact of providers on underserved clients. With this, it is my privilege and delight to introduce panel today. I will briefly introduce them and hand it over to them for the discussions. First, L.V. Murthy, who's the CEO of Dwara KGFS. Murthy is a keen strategist with more than 25 years of experience in rural markets for financial services and fintech. Dwara KGFS has been in existence since June 2008. The company's mission is to maximize financial well-being of every individual, every enterprise by providing complete access to financial services, particularly in remote rural India. Next is Nishant Kumar, co-founder and CEO of Lakshya. Nishant is a development sector professional working in the field of financial inclusion. Lakshya is a social enterprise to provide innovative financial solutions for urban underserved segment, which includes self-employed in the informal sectors, including, for example, drivers and shopkeepers, and blue-collar workers in the formal sector. Lakshya leverages technology to deliver strong financial use cases for their customers. Sucharita Mukherjee is an inclusive fintech leader whose work aims to ensure that financial tools can help the underbanked customers working in the informal sector achieve their real-life goals. She is a co-founder and CEO of Kaleidofin, a fintech platform personalizing financial solutions for underserved customers. Thiru is the COO of Kinara Capital. Kenar is a socially responsible fintech driving last mile financial inclusion of small business enterprise in India by providing fast and flexible collateral-free business loans. With this, I would request the panelists to introduce briefly their respective organizations, and more importantly, as a kickoff for the discussions, talk about how you have been, all of you are, leaders of digitally enabled organizations, and what has been your, digital transformation journey. So with this, maybe, in the order in which I introduced them, so yourselves, maybe Murthy, you can start off, followed by Sucharita, Nishant, Sucharita, and then Thiru. Over to you.
Thank you, Shantanu. Thank you so much. It's a pleasure to be on the panel, and especially with colleagues and friends who are there on the panel. So thank you so much. Coming to the organization, Dwara KGFS, as Shantanu said, we have been operational from 2008. And our mission has always been to provide access of financial services to the deepest rural markets, wherein every individual and every household gets the access. I think from 2008, when we started our operations, we have always been a fintech in terms of our delivery. Just to give you a small example, much before Aadhaar came in, we were doing authentication of customers through biometric validations. We had set up poles on top of our offices to pull network. So these were certain initiatives which probably at that point of time, nobody in the industry thought of. And our entire thought process was that how do we offer solutions to individuals, solutions to small businesses in a way which would be beneficial to them. Now, obviously, last 10 to 12 years, a lot of changes have happened. And I think every calamity brings in a new set of innovation. And I would say the space of financial inclusion, which everybody earlier used to talk about, affordability, availability, and accessibility, the 3 A's of the rural financial services, which is where everybody built their models. I think it's taking a shift. And if we really need to shift, I think 3 A's should shift to 3 E's, which is educate the customer, empower the customer, and enrich the customer. I think today what has happened is that in the last 20 to 25 years, various initiatives by central government, state government, multilateral organizations, or practitioners, they have been able to educate the customer in terms of what is finance, how to take finance, and all that. But I think now what we actually need to do is to start educating them in terms of how do you next look future ahead. I think as an organization, everybody talks about organization's way forward, but I think if the organization has to look at way forward, they have to also start thinking in terms of what is the way forward and future ahead of their customers. And that's where we personally believe that 3E model was the one that would really work, which is educate the customer in terms of moving digital. How does it help the customer? Empower the customer in terms of taking a decision. Today, everything is as per the consent. Today, with host of innovations that is happening, consent management has become a big thing. Data privacy has become a big thing. I think we got to empower the customer. And the final thing is that while doing the education and empowerment, if we do not enrich the customer with value-added services or the services which are built to be delivered, now those delivery mechanism has to be so nimble, and it has to be done through an omni-channel perspective. So what I meant is that what we as an organization, Dwara KGFS, is doing is that we are looking in terms of educating, empowering, and enriching the customer. While doing that, we are also setting up an omni-channel delivery model. And what we mean by omni-channel delivery model is that we have a brick and mortar model, wherein we have got close to about 300 odd branches in deep rural tier 5, tier 6 villages, where you have your feet on street to go and service the customer. And the typical model is that every village has got a beat, every village has got a beat date, and you go meet the customer on a specified date at a specified time and go and talk. Or the reverse is, whenever the customer is coming towards your branch, they basically come and get themselves serviced. So how do you ensure that you are available in all the villages that you operate. Say, for example, we operate out of 12,000 villages. And how do you ensure that Dwara KGFS is available to their customers round the corner in all the villages? So that's where we thought of setting up a digital agent network. And very happy to say that as we speak, we have got about 1,000 digital agents. And they are like an extended arm of Dwara KGFS, that the customer need not wait for a wealth manager to come on a specified beat date to get themselves, whatever that they want, or they actually breaking their day schedule and walking to the branch. They can go to the nearest digital touch point of Dwara KGFS. And through these touch points, what is it that we offer? We offer all kind of banking services. When we say banking services, starting from Aadhaar-enabled payment services, money transfer, direct money transfers, and all that stuff that could happen. All the bill pay services could happen. And at the same time, all the repayment of the customer can also be done through this network. So typically what happens is that a customer need not wait, or if the customer for some reason has missed to pay on a specified date, need not worry that the customer is becoming delinquent. They can go to the nearest touch point and pay their money. While doing so, what we are basically trying to do is that we are increasing the depth and the width in the village that we operate. So this is one channel that we have started, which we call it as KGFS Digital. The second channel that we basically have started is something called as KGFS Direct. Now, KGFS Direct acts like an inside sales organization, that we have our own direct wealth managers, and the last 10 years data that we have, this works more like a telecalling center where all customers can, it is an inbound as well as an outbound center where all service related issues can be resolved, all cross-sell and upsell can happen, and educating the customer to move to digital transactions. So that way what happens is that there is a physical model which is handled by the branches. There is a extended arm, which is a digital agent network, which is right to the village. And then there is a direct channel which operates. So it is a complete 360-degree service availability is there for the customer, and customer could walk up to any of these channels, and any interaction that happens at any of the channel, the visibility is to be there for the other channels. That tomorrow, today the customer has come to KGFS Direct, tomorrow the customer goes to KGFS Digital. What was the last transaction and interaction that the customer do at a particular channel is visible, for which obviously you got to have a good CRM, and we have invested heavily into setting up a CRM where a customer 360 could be there. And the focus is, it is just not asset-based products that we would look. That is what our vision always was. We also, along with asset, we also look at wealth management products. And on top of all this is the entire digital collection modules that we have set up, thanks to COVID-1 coming in. What we, as part of our strategy, thought of, putting it in 6 to 12 months to 18 months, the roadmap, we had to fasten up. And today we have all the digital collection modules. We are completely on e-documentation. There's not a single document that is taken out. Everything the customer can do a e-sign. So everything is kind of digitized. So the thought process and the way forward for Dwara KGFS is that digital is the way forward. And we always think that the rural customer probably may not understand, but I think that is the mistake that we do. I think if educated properly and if empowered properly, I think digital customer is ready to adopt to the new changes. And I think if we look back last 10, 15 years, all the changes that have happened, all changes were forced upon to the customer. Institutions did digitization more from their risk perspective. Today, you look at it post-demon, the entire digitization happened where the money started getting directly put into the account, savings bank account of the customer. Now, was it customer-friendly act? I don't think so. I think it was more from all the other organizations' risk perspective thought that, they wanted to get rid of cash at least in one leg. But the customers accepted it. All changes, all innovations that institutions want to do, I think rural customers are willing to, walk the talk along with you, walk the journey that you are wanting to do. I think it is just that we got to educate them and empower them and enrich them.
Thanks, Murthy. Nishant, you want to go next?
Thanks, Murthy. I think it was pretty inspiring the way Dwara has been able to deliver on the financial products to the remotest areas of India. Santanu, you have talked about the legacy issue. We are a very early stage startup, so thankfully we have to create a legacy. We are not struggling with a legacy issue of you know transforming ourselves digitally. So from day one, we had started with a digital first approach. And the reason was very simple for us. The reason was that we wanted to impact on the financial resilience, on the financial health side. And for us, the instruments was savings and for us, the instruments were savings and insurance. And we took a call that, as a startup, if we have to make an impact and, if we have to look back ourselves and, really scale up, digital is the way forward. And we took this call early on in our journey, right? And, there are, so when we have started this digital journey, there were certain lessons which I wanted to highlight in this panel. Maybe it will be useful for the audience. So Murthy has talked about empower and education. I think that has been the core of what Lakshya has been trying to do through its digital approach, through its digital delivery of the financial products. What we have seen is, and this learning has come and sort of institutionalized within Lakshya, is that in the initial days when we are offering the digital financial products to our user, there is a steep learning curve for them. We try to make it very simple. We try to make it very intuitive for our users, the formal financial products. But in the initial days, there is a learning curve for him. And chances are that the layer of the digital delivery is adding to the complexity for him to understand the or interact with the financial products, right? And this was adding to the digital hesitancy. This was our experience across all the segments with whom we are interacting. So we thought that, okay, what we can do about reducing this digital hesitancy, how we can make it very simple, a no-brainer for our users to adopt the digital financial products. And we took one very simple step for it. What we did, across the products that we were delivering on the savings, investment, and the health insurance side, we broken it down to the most simplest and the most basic products. We created a bouquet of all the barriers which customers were informing us. We broken down all the barriers and we said that, okay, you can save as low as ₹5, you can withdraw anytime. You can get health insurance for as low as ₹150 for hospital cash insurance. And this has created, or at least this has helped us to overcome the initial digital hesitancy which we were seeing in our users when they wanted to adopt the digital approach for interacting with the financial products. The other thing which has helped us to increase our interaction with the users is, breaking down the communication or the product communication with our users, and leveraging the digital communication as a means to build our brand, as a means to increase the trust for the financial products with our users. What we have done is we have created a layered structure of the product information. So what we have seen is, even though we provide different platforms to our users where they can interact with the products in a more dynamic manner, most of the users shy away from it. So they consume the data, but there is very little two-way interactions with the channel which we provide them in order to understand the products better, right? So what we have done to overcome that challenge is we give them different scenarios. We post the utility of the product in the different scenarios. We have created layered structure where the basics of the information of the product, and then we increase the complexity of the product information which we provide to the users. And this is on a net basis. This two approach has worked for us, at least from the user's perspective, at least from the interactions or increasing the traction of the financial products. From the user perspective, these two approaches have helped us. From the company perspective, we have made some trade-off. We are an early stage startup. The capitals are always going to be limited, and digital transformation is costly at times. The one trade-off that we have done is we have looked at our short-term goals versus what are the long-term goals for the organization. So given if you take the hypothesis that in the long term all the problems can be solved through the digital transformation, but the flip side of that is you can also stuck a lot of capital at a very early stage in doing so, right? And we have taken a very judicious call on sometimes we have gone for short-term solutions and not really invested very heavily on the digital transformation within the organization so that we can conserve some cash. And that's the reality, given the how costly the resources have gone, especially during the COVID times. This has become one of our ways to conserve the capital and look for a most optimal solution and not really get unnecessarily, I would say, attracted to putting all our resources behind the digital creating of digital systems. The second thing is which have helped us from the company side is we realize that our users are still thinking in a more physical manner. So his behavior, his action, his approach towards interaction with the financial products, even though we are providing them a digital platform, is still mimicked by his experience of what he does in a physical world, right? And a simple example is a savings passbook. I give him a very real time, a very interactive savings passbook, but I'm pretty sure that if I go today and ask my users how many of them you want a physical passbook, maybe majority of them will raise their hands, and this will take some time to change. And therefore, whenever we prioritize any process which needs to be digitized, we always be very cautious and very cognizant of the fact that how he is doing it today in a physical world, and how much needs to be digitized so that it doesn't become a alien system for him, right? So I think those two lessons from the user's perspective, how we can create a lowest common denominator product or a low barrier entry product, which can remove the digital hesitancy, and using communication as a tool to build a brand and build the trust. And from the supply side, having a trade-off between short-term and long-term goals. And this has helped us to create a continuum or a continuous process of the digital transformation within our organization, where we are also able to conserve the cash and prioritize which are the processes which will bring us the maximum benefits. Santanu, you are on mute.
Thanks, Nishant. Thank you very much. So Charita, over to you.
Sure. Thank you so much, Shantanu. And thanks, Murthy and Nishant, for your comments. I think really resonate with me. And I would say very, very, common lessons, also common customer segment that we're trying to address. Just to introduce Kaleidofin and then go into digital transformation, we started Kaleidofin with the dream of saying, how do we provide tailored financial solutions to make customers' life goals a reality? There are so many, infinitely beautiful possibilities of our future lives, and we would really like to open up these possibilities by using finance as a tool. So we asked ourselves two big questions. One was, how do we solve this problem of delivering good financial solutions to not just a few 100,000 customers at a time, but millions of customers at a time, hundreds of millions of customers at a time. At the end of the day, India is largely an informal economy, and 90% plus actually work in the informal sector. So here we are talking about probably 7 to 800 million adults of 900 million adults who work in the informal sector. And therefore, digital strategy must play a role here. How does data science play a role here? How does technology play a role here? And importantly, how do partnerships play a role here? And in some sense, therefore, our vision is to really enable digital transformation, provide the products that enable digital transformation for all of our partners, and via them impact the customers. Because we know, like Nishant rightly pointed out, that this is expensive. This is not these are not platforms that should be built again and again and again. That is really quite wasteful. There are economies of scale in providing these platforms that a number of different institutions can use. And honestly, institutions that are serving the last mile, are bringing huge complementarity to our work, and therefore the importance of partnerships. And one of the core pillars of our business model is to really drive digital transformation via those partnerships. So Kaleidofin, therefore, is a B2B2C model. We are a neobank with a mission to propel customers towards their life goals by providing intuitive, tailored financial solutions. We follow a partnership model with high quality institutions. These could be MFIs, these could be NBFCs, these could be cooperative banks, even corporates. We look at these as channels to reach out to customers, and so that they can do what they do best, and we come in and really provide the tech and data science solutions. Our presence spans today over 400 districts, and we have about 1 million actively transacting customers. And the key product lines are one, Kaleido Goals, which is a saving solution, which is really oriented around the customer's goal. Again, a lot of common threads here. We believe that assistance for the informal sector customer, for many informal sector customers, is a must. And therefore, how do we combine digital with touch? So therefore, how do we give access to a really solid savings solution, but at the same time provide an onboarding flow that is actually assisted, that can help the customer and help that customer in their journey from assisted to self-serve. For us also, it didn't happen in a day, right? It took a decade for us to get where we are today. So therefore, that assistance is very much inbuilt, and therefore we are one of the few tech companies which, whenever we build a tech solution, we provide a direct-to-customer interface, and we also always provide an assisted interface. It's one of the principles of dealing with informal sector customers, just to recognize that, look, it's required. We embrace it. We don't say that, hey, you know what? And if you don't embrace it, you're talking about serving the top 60 million customers. It's very simple. The choice you're making is very much that if you run away from assistance. At least that's what I believe. The second solution is called Chi-Score, which is a supervised machine learning based automated credit health check for informal sector customers. One of our goals is to provide tailored financial solutions, and we see that one of the really the pieces of infrastructure that's holding many institutions back is the lack of solid underwriting models. and the lack of specialist underwriting models for specialist products. So therefore, you can figure out perhaps how to do one product well, but very, very difficult then to really serve the customer's complete financing requirements. So in some sense, how do you graduate a customer from taking a group loan to a micro enterprise loan? Is training your staff the solution, or is the model the solution, or is it, is it some combination of process, training and model? But clearly those three elements have to come together, and we believe that the underwriting model is really one of the cruxes. And again, going back to the economies of scale logic, very, very expensive for every single institution to attract and retain a top-notch data science team. We are, building really a suite of models to handle all the way from personal finance to enterprise finance. And in some sense, therefore, really impacting not just the digital transformation, but also the innovation journey, for the benefit of the customer. The third solution is Kaleido Pay, which is really a suite of inclusive digital payment solutions. And here our target is the feature phone customer, the customer who has a smartphone, probably watches YouTube, but quite uncomfortable doing financial transactions. For example, even like my parents don't do financial transactions on the smartphone. They just don't feel comfortable. They need that assistance. So we know that some of these transformations will take time. And however, once the digital payment mandate is set up, what we have seen is that customers very easily move to digital payments. But that first hump is quite a significant hump, and Kaleido Pay is a solution that helps institutions, get customers onto digital payment mandates with a very, very simple, easy process. So as you can see, most of our products are actually very aligned towards digital transformation. And really are meant to support the digital transformation journey of each of these institutions. During the COVID pandemic, actually we had a lot of product development. Kaleido Pay actually came out of the COVID pandemic. Murthy was also talking about this, that sometimes you're in a position where you're forced to innovate. A crisis always forces some of these big changes. And we saw that right now, 18 months later, almost all micro entrepreneur loan customers are now on digital payment mode, which was considered unthinkable earlier. And I'm sure the further transformation will also happen. This is the beginning. This is probably 10 to 15% of customers, but the following journey is still out there as institutions also experience efficiency, cost reduction. Customers experience this as well. Along with Kaleido Pay, what we offer is, we know that cash in, cash out networks are just as important. There is no point the customer having a payment mandate without a cash in, cash out point being nearby. And therefore, we say that let's actually put these two together. Let's not pretend that the cash in, cash out problem will get solved. Let's actually open out the network of cash in, cash out points. So we have partnerships with a number of BC networks as well as payment banks in order to provide this network of cash in, cash out points, again via the Kaleidofin platform, to all of our institutions. So, the biggest principle I would say for us is to combine tech with touch and not run away from touch, but find good ways of combining the two, because I think that's where the transition points will happen. and I'm very, very confident that this journey will accelerate in the future. But it's really exciting to be a part of this panel and be a part of this ecosystem driving this change.
Thanks, Sucharita. We'll come to some of the points you've raised, very, very interesting points, in terms of the tech and touch approach, which some of us call it phygital or physital. Some people don't like it, but I think it's a reality in the developing world where the penetration of smartphones, use of mobiles are, vastly restricted, or, they're still growing. And also the whole, approach to your transformation journey leveraging data, partnerships, and technology. So we'll come to that maybe in the follow-up discussions today. But Thiro, over to you. Let's hear you.
Yeah, yeah. Thank you, Shantanu, and thank you, panelist Murthy, Nishant, and Sucharita. This was really good to hear different perspective of financial transformation, because we at Kinara now, it's been 10 years we have been here, and we have been doing this micro and small business loans, mostly credit. We are trying to diversify into the non-credit products sooner than later. But now, talking about lending, we're spread across 7 states with around disbursed around 60,000 loans, and with around 1,000 crores of AUM. The thing is, from day one we are like paperless, so that is the one thing. But the interesting thing is, even though we have been doing paperless kind of process from day one, there are different phases of digital transformation that has happened in our historical perspective. So if I see this topic, and also from our experience, the digital transformation, I can say that one is about the process, the workflow which we do, that how do we do more of a digital transformation from a process workflow perspective. And another is the products which we offer, or the credit we offer, or the loan decisioning we offer. How do we use more data science, or data based algorithms, or credit decisioning, auto decisioning models from a digital perspective, that is from a non-workflow perspective, more of data crunching, more of artificial intelligence and machine learning. But how do we also mix the market intelligence? So without mixing the market intelligence only by going pure auto decisioning, whether how do we do that? That's the second part I was talking about. And the third part is about how do we make and third part is about obviously the collections part, which I can talk about maybe later on. Different 400 different platforms wherein which we have been integrated to for the collections perspective. But all the above, where I'm trying to say is, how do we connect all this to make our customers life easy? That's the end result. Whatever the service we provide, how do we make our customers life easier and also comfortable for them? We say doorstep service, we say faster turnaround time, we say customized flexible products for them. How do we do that? And how do the other ecosystems support for us in terms of when I talk about flexible loan products, flexible payment terms? I also think that how the other the ecosystem, the regulations, everything support for us in terms of other data related aspect. So what we have done is, from day one we have been automated the process. So that was like a comparatively easier thing to do. We have this Kinara platform, wherein which different platform we integrate, whether it's a credit bureau platform, or a banking statement analysis platform, or a GST platform, or any of the identity check platform. All these things gets integrated into our central Kinara platform through different APIs, so that our workflow becomes more faster, reduce the turnaround for the customer, and give the decisioning in a very faster period. So but there are challenges how the informal segment, which is the cash segment, is going to get used to this workflow. Because what I'm talking about is the level which is little above microfinance segment, wherein which a little bit of banking, little bit of revenue in the bank, little bit of revenue in the GST. But the challenge is, how do we make it more relevant for the cash customers? That's where Kinara has done some unique proxy indicator work, wherein which how do we assess the how do we assess the revenue of the cash business, or how do we assess the cash revenue of any business? So that's where we have put in some more thought process on analyzing the different sector, subsector, what could be the revenue based on the employee strength, based on the electricity consumption, or based on the area or the square feet for different traders, manufacturers. So that's where the data science piece also kind of helped in analyzing these revenue of the customers through some of the proxy indicators. So that's about the process workflow. And in the process also, now I'm talking about two different aspects of how I help my field officers to make it more faster, or how do we make the customers to do self-service. So that's where we have introduced our My Kinara app, which is like a multilinguistic app. So it's not only in English, it's in all the languages wherever we are working. So that vernacular thing also helped, because when we did a survey, people are little bit hesitant to do the self-assisted model, but when it is in their language, people are little more interested. So that kind of little bit of change also helped in. So that's on the process effectiveness or the workflow side. And coming to the second point is about the data science. That's where obviously we have data within the organization and data outside the organization. So how do we use both? See, data within the organization will come from some of the vintage. We cannot start using our data only with our 1,000 customers or 2,000 customers on our credit policy or product. So we have to wait for some time, and then when we get to that decent number, like say 10,000 data points or 15,000 data points, that's where we do more of our data decisioning model. Earlier there was so much of manual intervention in every loan decisioning, everything. Now what we have done is, we have removed all those subjectivity from the people to make the machine decide what is the kind of loan amount, and give different options to the customers. That's the kind of, whether you want this product with this pricing, with this amount, with this tenure, or you want this product. So that's the kind of bouquet of kind of, whether you want a short term working capital loan, or a long term loan, or you want a line of credit kind of a loan. So all these options we are able to possible to give with the kind of data science model which we have. And then the third part is about the collections, which I was talking about is again, as everyone mentioned, the last 2 years, because of the COVID pandemic, we wanted to kind of do collections without our people going into the field. That's where we have integrated our collection module with the kind of a Setu, is a kind of a platform wherein which 400 different payment gateways. People can transfer money from the GPay or Paytm, or I mean, thanks to all the UPI related stuff. Even they can go into our any bank website and add Kinara as a bill pay or a biller. So that has helped in earlier our collections, the cash collections, which was around 80% of the bouncers, is now converted into, now almost 70% is digital collections. So that's the power of people getting more into. And all of this, when we do, the one thing just to conclude on this first remarks is, this has helped the customer also to become more digital. See, that's the change. What we are seeing is the smartphone penetration, which I think Sucharita was mentioning, like we were surprised to see that around 94% of our customers have smartphones. I was just guessing before the survey, maybe 50%, but when the result came, like 93%, and people are using Facebook and YouTube and what kind, I mean, sometimes we think they are not tech savvy, but actually they are more tech savvy than us. So that's the kind of how people are getting more digital. So when we say that if you have a proper banking transaction, if you have a proper GST, you are going to get a good loan in a very shorter term compared to a cash revenue customer. So people are trying to register more into GST, or people are getting more into. So that's where we are also doing more of a customer workshops through external agencies to tell them MSME Udyog how to register in that, how do you register into GST, what are the benefits you get if you do a banking transaction. So that's where I think we see that when companies are getting more digital and also the customers are getting more digital, I think the whole ecosystem actually get benefits by delivering more effective and efficient financial services to these informal segment. Thank you, San. Shantanu, you're on mute again, I think.
Sorry. No, thank you very much. Again, a very different perspective. I think, as you said, that your customer segments possibly are slightly above the MFI. So I think in some ways they are slightly, more digitally matured. I'll come to that point as to, this thing, but let me come back to Sucharita. Sucharita, very interesting, the tech and touch approach. And I think if I heard you correctly, that, the entry point to the digital, financial services in many cases has been through the collections, enabling the collections, which is, if I heard you correctly. And I think one of the common themes which resonates between yourself, Thiru, and Murthy is that all of you are leveraging digital collections in this pandemic. So talk to us. Let's hear a bit more about it. How have you? What are you doing in that area? How are you getting your customers, many of them maybe don't have a smartphone, or they have feature phones? So what are the different models which you are adopting? And and I heard you saying that the penetration is roughly about 10 to 15%, if I heard you correctly, whereas Thiru is a bit higher, maybe because of the profile of the customers they are looking at. So what are you doing to ensure that over a period of time, this amount can actually go from 10 to 15%, maybe to 30, 40%? Because as we speak to various microfinance organizations, FSPs, we find that, that's the thing they want to crack, because while they see some initial momentum in the uptake on the digital collections, but at some point of time it plateaus. So how do you take it to the next level? Maybe some experience from the work which you are doing.
Sure. Yeah, so I think that you are absolutely right. The 10 to 15% number that we are talking about, which is pretty typical for a microfinance institution. I would say this number is above average, much above average. Most microfinance institutions would be doing digital payments for maybe 2 to 5% of their customer base. So 10 to 15% is actually a very good number at this stage, just to benchmark this. And Murthy can corroborate this or not. But I think that there are very, very different customer segments. I think the top 10% of customers will look quite similar to the average customer, let's say of a Kinara Capital, and has a smartphone. But you have to have a smartphone and you have to have a working debit card. It's not just that. There's a lot of detail here. You have to have a working debit card. Your phone number has to be linked to your bank account and Aadhaar, and it must be the same. Otherwise, you will not be able to set up a UPI handle. Right? So these are actually 4 criteria and not one. Having a smartphone is just one of them. And then there's the other behavioral aspect of, you might be watching videos on YouTube or Hotstar, but you've never done a financial transaction before in your life on the smartphone. I watch videos all day. My mother also watches videos all day. That doesn't mean that she is comfortable doing a financial transaction on the smartphone. She's been using a smartphone for years. So, so I do think that therefore, when you think about it, there are actually, 4 or 5 conditions, some of which are infrastructural, which we have to sort out. For example, now when I talk about, let's say, 90% of the customers, we see that in the south, let's say in a state like Tamil Nadu, having a debit card, perhaps 70-80% of customers, have a working debit card. But there is a drop off because of changing mobile phone numbers. That's the problem across the board. Whereas when you go to the north states like UP and Bihar, we actually see very few customers even having a working debit card. That's not, you can it's more like, maybe 10% over there. So I mean, like they say, India is a continent almost. It's not a country, it's a continent, and there are so many different Indias at the same time. So therefore I would say that the move for customers who already have a working debit card, one less thing you have to worry about, but you would need to handle and take them through the journey of making sure they're linked up on Aadhaar. They they can therefore set up a UPI auto pay, which is likely the first digital payment mandate, because you can't do it through net banking. That's not possible. That's something, net banking is a service that's typically not available, at least in our knowledge, to microfinance customers. So what we did was we said that, okay, we are getting to 80-90% of customers where the problem is quite difficult to solve. You cannot, and I'm breaking it down to, you cannot even set up a UPI handle. I'm saying everything else, net banking, etc., is much more sophisticated, requires many more hurdles to be crossed. So what we did was we said that, okay, let's digitize the paper NAC process. Paper NAC process, the one of the advantages is that it works on all banks, all RRBs, cooperative banks. Every single bank is on the paper NAC system. But the pain point is that you have to transport this paper. This paper doesn't get correctly filled out. There are many mistakes, and you have to transport it back and forth. And therefore, we evolved the most sort of simplest form of solution as one where basically you get a good scan, intelligent scan of the NAC form. That information, it tells you whether the form is correctly filled out or not. That's number one. So there's a lot of AI working in the back end to make sure that that's the case, and you don't need to transport that paper anywhere. That information simply gets transmitted to NPCI, and then the mandate is set up. In any case, it's highly unlikely that the customer will be self-serve in a microfinance construct. So therefore, you are talking about 90% customers who you will have to reach out to set up a mandate anyway. So then what we noticed was, with the UPI product, there were so many barriers that, irrespective of how much assistance, how many times the wealth manager goes, if the barrier is there, the barrier is there, right? If the mobile number doesn't match, you cannot set it up. Debit card is defunct, you cannot set it up, right? Wealth manager cannot do anything, agent cannot do anything. These are systemic issues. So in some sense, therefore, we thought that this was a very good workaround, because we are using a tried and tested process. It doesn't need all of this, and it's extremely inclusive. It will cover all 90%. Now, the answer to your question on how do we get more customers into, let's say, the UPI bucket. And by the way, the unique number of UPI users in India today is just above 100 million. It's not that many. You are talking about top 100 million customers who have UPI handles. 800 million do not have UPI. And these are customers who have even done one transaction on UPI. We are counting every single customer. So it's a very low bar. We're not talking about regular usage here. So in some sense, you are seeing that the number of transaction volumes are going up, but it's the same set of customers going more and more digital. The growth in number of unique customers is very slow. So therefore, assistance is critical. Tech solutions such as KaleidoPay are also critical. But long term, we have to work with banks. and or the new banks, I'm hoping there are going to be some in the room, to really make sure that all customers do have a debit card, right? One of the issues is that, some of these debit cards are just lying in the branch. They were never sent at all, right? In practice, we see a lot of that because the economics are not working out for the bank, and therefore bank is not really very interested that customer has a debit card. So long term, we do have to find banking partners that offer good bank accounts, good cash in cash out partnerships, and 3 working debit cards, so that that infrastructure is there. Today what we are seeing is, we're going on a kacha road. We the highway is not there. The bank partner is that highway. So so it is, I wouldn't say it is anywhere close to being ideal. And the good thing is that at least we have some sort of bank account. Even though it may not be a fantastic bank account, it therefore is not a very well used bank account, but we made progress. Now it's sort of like the some bank account is equal to the kacha road. You can do the Kaleido Pay on that, but you want to go to UPI, you need a better bank account. You need all of that. Now, interestingly, also what we are doing is we are working on the tech side with let's say the account aggregators to make it much more inclusive. So for example, the debit card being compulsory is not necessary. The UPI was set up this way, to where a debit card is compulsory. But, given that we have Aadhaar, what if we said Aadhaar is compulsory, right? And make that the unique ID rather than a debit card, because that is automatically so much more inclusive. That's of course a longer journey, Shantanu, but we are working with iSpirit and NPCI to drive those directions. For example, for account aggregator, which is just getting launched. So we're saying we need assisted account aggregator, and it cannot be linked to debit card. Otherwise, again, you will lead to the same problem as UPI. So, long answer, sorry.
No. This is extremely insightful, because I think what you're saying is the practical reality. Because the statistics can be very misleading, because when we look at statistics, numbers published, 4 billion transactions a month of UPI, we say, wow, every 3 Indians are doing 3 transactions in a month. That is terrific. But actually, you're right. It is just a handful of 150 million people who are doing that many transactions. So I possibly am doing 10, 15 transactions as opposed to this thing. So no, extremely valid. Thanks for the input. So Murthy, I think on a linked, there's a one question which has come up on the chat, and I think it's extremely relevant. You spoke about, you described yourselves, Varas, as the wealth managers for the rural India. And you spoke about your omni-channel strategy, how you are driving this. So one of the questions which came up is that, with overall low financial literacy levels in rural India, wouldn't over-reliance on digital channels, in your case, omni-channel, widen the gaps between haves and have-nots? So maybe, given you are in rural India, your channel, maybe you could take this up.
I think that's a very, very relevant question. And I think that is where I would say that what we say is high touch and high tech. This is where it goes in. And, what are we actually trying to digitize? I think that is where one needs to clearly understand is that there is a pre-sale process and a post-sale process. And at what level are you trying to digitize? Today, as I was mentioning, that pre-demon, post-demon, everybody kind of digitized the account. Money getting deposited into the SB account was one digitization process. Today, post-COVID, it is the collection module which is actually getting digitized. While the haves and have-nots and the digital divide that you're talking about, I think I want to make one thing very clear. We think that rural customers are not very smart, very educated and all that stuff. Let me tell you, they are one of the most smartest of the smartest customers. Urban customers, probably we might take 3 or 4 loans in our lifetime, whereas a rural customer continues to be in loan and their life cycle runs on loans. So they are so savvy in terms of, interest rates, when to close a loan, when to pre-close a loan, when to take a new loan. And they are very smart that way. When do I put a jewel and hypothecate a jewel and take a loan? But having said that, I think when I said high touch and high tech, our conversation with the customer begins with, a very, very prolonged discussion where we kind of generate something called as a financial well-being report, which is like a financial Janma Kundali of a household, which actually captures starting from the total number of people that are there in the household, their income, their expenses, their assets, their liabilities, what are their financial goals, what are their financial dreams, where do they see the household in next 5 years, 10 years, what are the various goals. Basis this discussion, a report gets generated, and this has been happening for the last 10 years. That a report gets generated. Now, a question might come as how much did you use it? But the tools to actually dissect the data, the AI and the ML tools have just come in. So we have been trying to do this. We are using the tech to automate the decision making and remove the subjectivity aspect, which a wealth manager, the interface between the organization and the customer, who is probably a graduate or just out of the college, to remove that subjectivity and he trying to decide what product should we push. So the technological aspects of using AI, ML tools, the technological tools is more in terms of coming up with product suits, coming up with credit score models, enabling those things to come up with a particular product. Conversations happen, which is where it is high touch and high tech. And that is where the entire delivery happens. So this financial well-being report, again, what happens is that, as earlier I was mentioning to you, the Omni-Channel. Now, every channel you can create, but then every channel also has to be digitized in their own aspect as to what are the various tools that are using for ensuring that, you are digitally savvy. Now, I only spoke about the delivery aspect, but when it comes to the customer, what we have done is that we also have launched My KGFS app, which, just as Thiru was talking about My Kinara, that there's a WhatsApp chatbot where a customer could probably get back. There is a tele helpline where the customer could get back. There is this digital touchpoint where the customer could get back. So assisted model is where I think this entire market will operate. And that is where what we are trying to do is we are having multiple touch points so that there is not that kind of a digital divide. The haves and have-nots are trying to be, clubbed by having multiple touch points in terms of every channel having its own individual app, which basically goes and sits as a super app at the overall delivery model. So customer can reach, customer can understand. And that is where what happens is when you're moving towards a digital tool, the key critical things one should look is the language adaptability, and that the customer is able to understand. Whatever that the customer is actually hearing digitally, the customer should feel that it is in-person conversation that is happening, rather than making it too overcomplicated. So these are the things that we are doing. The other haves and have-nots also, to one of the points that Sucharita was making in terms of, problems and challenges in digital transaction. One of the key critical challenges that we face, and especially when you work with women folk, is that while you are registering for a UPI thing, you also need to have a mobile PIN or a PIN number attached to that particular digital card. You might have a card. The bank has sent a perforated kind of a thing as part of the PIN, whereas the customer has not gone and changed the PIN. Now, does the ecosystem really support in terms of changing that PIN? Unfortunately, it doesn't. So this is where we are. So now what we are wanting to do is, I think the safest way to reduce the gap is Aadhaar Pay. Now, Aadhaar Pay is so simple to use that actually high touch and high tech will play through Aadhaar Pay, and privacy of data and security is something which you can be very cautious of. That you go put a biometric, there is an OTP that comes, the customer is also safe. Wherever we are possible to have a digital PIN, a digital card, debit card, you could always have a UPI mandate that you can create. So that's all we are trying to basically ensure that the divide is kind of plugged or brought down. If that answers you, Shantanu.
Yes, no, thank you very much. This is very interesting, the way and I think very interesting to also hear that in some ways, contrary to what we hear or believe, rural people are quite savvy as opposed to, as much more savvier than possibly we, all of us think, those who don't know that segment very well. Uh, so, Nishant and Thiru, your model is, as you mentioned, is more, digital first model. And that's how you are building your, the business model is saying. One of the questions which has also come up, maybe like to sort of address, and maybe Thiru, you did touch briefly on that, but it'll be useful to elaborate, is saying that, considering that, micro enterprise segments, much of the transactions happened in cash, and cash is the king. A lot of people prefer cash opposed to digital. By having a digital first approach, are you really missing out on a very large segment of customer base? And and what is your strategy around that?
Yeah, I mean, we as I was explaining, we have a separate workflow and a separate kind of a model for cash customers. We definitely don't miss those customers because, as you said, like even after demonetization, what happened? Like the GST came into picture, and then people were trying to be more. I mean, actually, after demonetization, when people are trying to be more. Doing more transaction through formal sources, this GST had, because of the increase in tax, have made people to go back to cash little bit during that point in time. We have seen in some of the, particularly the textile sector, we have seen this trend. So we definitely cannot ignore the cash transactions that happens in the business, because there are so many advantages for those people. While buying raw material, they use cash. They will buy different kind of raw material from different people. So all those trends, what we have seen is like cash, we cannot definitely replace cash. So that's wherein we have a cash revenue assessment model, the proxy methodology which I spoke about, based on the different proxy indicators. How do we see? But what we have seen is also people have also maintained a very formal way of maintaining an cash business, the what we call as kacha receipts, all those things. We have seen people who have maintained that, also shows that they are kind of more disciplined. So we take into account those cash revenue also, but we also take into account that whether that cash revenue is sustainable or not. So that is one more aspect. See, for example, provisional store, definitely there will be more of a cash revenue, cash transaction. We might say that, okay, this is the way they do the business. But in a manufacturing or informal manufacturing, we need to see that whether we consider the whole cash revenue or not, whether it is sustainable or not for our loan decisioning. All those things definitely we have taken into account. In terms of collections also, everybody who does not have banking required to deposit in the bank also needs some kind of facility. See, I'm talking about, when I say that all these 400 different payment gateways, but if the money which they earn from the business does not go to bank account or the payment wallet, then they, with all the payment gateways, they will not be able to do any transactions. So that's where what we have done, what we did is also to collaborate with the payment banks. We have collaborated with Airtel Payment Bank, so wherein which there are more than 5 lakh distributors in the country. So our people can go and deposit the money at any Airtel payment distributor, like any Airtel distributor, so that any money which is deposited through the backend integration, the money gets immediately credited into their bank statement. It doesn't go through the regular BRS validation and all those things. So that is one thing we have done, not to exclude the cash customers. And just to also that points related to UPI and like that, I just wanted to add. Yesterday I was discussing with somebody that in November 21 there was like 4.1 billion transaction happened through UPI. And one more interesting analytics was that the 50% of those transaction are less than 200 rupees. So that also shows that how this small, I mean, it is not about the higher ticket kind of transaction which happened. So this is a trend which is being published by the UPI, and that's why they are also now keen on, RBI is keen on introducing the UPI feature in feature phone also. This was a kind of a development which is happening, even though there was earlier something which was star hash 99 something, some code based thing was there which didn't pick up properly. Now without internet, through text based UPI transaction in future phone is also one thing also which will also kind of a development which can help in increase, just to touch upon the points which we discussed before.
No, absolutely, definitely. And I think Sujata makes a very valid point, is that the whole friction seems to be in that UPI handle and that debit card and this thing. So to Murthy's point, that if a alternative in from Aadhaar instead of the debit card, we can make it to Aadhaar. I think that's, or using Aadhaar Pay, some of these frictions would obviously, needless to say, I'm sure the people who are behind all this are aware that these are frictions and they'll come in. But Nishant, how are you looking? And the same question to you. How you're looking at customers who are more cash-based or not so digitally savvy. So how are you bringing them within the purview of the Lakshya ecosystem?
So Santanu, there are now when we have decided on the digital first approach and the product that we have chosen as our primary instrument, savings and insurance, we have taken a judicious call that we will be going after only the digital customers who are digitally at least are able, have a bank account, have a smartphone, and can do digital transactions. The reason we are two front. One was we had focused on the urban underserved, and typically when we have done the survey, which have improved in fact significantly post-COVID, the access of the smartphone with Geo, the internet availability was significantly large, and it was not necessarily overlapping with the uses of this financial products. So they have a bank account, but it is not necessary that they are using these bank accounts to do an active savings or purchasing insurance for themselves or for their families. We understand that even in a city like Bangalore, which is perhaps one of the most tech-savvy, and I'm talking about auto drivers, which are again a little more savvy in nature, I would say that I'm not able to reach more than 40% of the total 2 lakh population base. So 40% is where I get capped. And similar is the, similar capping. And in fact, it would be a little lesser in other segments like factory workers or artisans and weavers or other communities where we are active. But we had our constraints. So for example, in the products that we are dealing in, it requires a much more, much more active communication to make them understand the product features or the commissions which are available today on the savings and insurance, at least those where we are dealing in primarily, does not allow us to have a very high touch point. And that's the way we would be going ahead. We think that the segment which is having a digital solution, there is enough of them who does not have access or understanding what Murthy was talking about, educating and empowering them. I think there is enough of them where we can work and which can form a significant portion of our target user base. There is a lot that can be done even with them. Forget about doing the what maybe Sucharita and Murthy are doing with their respective user base in the rural areas, which is like 10 times or 20 times much more difficult to deal in. If you look at the comprehensive financial packages which can be sold to this segment, I think on a unit economics basis, we can still be making profit. And as I said, there is a large market which is tech savvy and not served. So that's the population which we are after.
Right, great. I know we have about roughly about really about 12 minutes to go. So I'd like to pose a question to all of you. You know, how is your work impacting your customers? You know, I mean, in real sense, and a theme is being that, you know, how you, so maybe one example from there where, you know, you have actually touched uh, a very special chord with your customers, and in some ways their lives, their livelihoods have been transformed or, you know, positively impacted as a result of the work which you are doing in your organization to digitals. Maybe one standout case or two standout cases, maybe a good examples of, you know, of the good work which you are doing, how is impacting your customers.
So,
I can get started.
yeah, please go ahead.
Yeah, no, I think we've seen that savings, like Nishant pointed out, is a universal requirement, right? Credit might still be required for a fraction of some proportion of customers, but savings everyone needs to do, right? Whether um, you have more money, you have less money, all customers need to save. It's one of those, all customers need a bank account, all customers need to save. And you know what? Uh, One of our first locations was Gujarat, and that's where we have the longest history. We are 4.5 years old, so uh, have to choose between one of those. And we really found that education as a life goal was very, very motivating to many of our customers. One of our customers was saving in a daily chit fund. She was a tailor, in order to fund her LIC policy premium, which was annual. So basically, she would save every day, on her way back from work, and and then get the money out, put it in the LIC policy, and do this every year. Uh, and she would divide her money into several chit funds, not just one, because she didn't know which one would work, right? She didn't know, and when we're saying which one would work, she's basically saying, I don't know which ones I will get money back from. So in some chit funds, she gets 4-5%. In some chit funds, if she's lucky, she gets 10-12%. In some chit funds, she also never gets her money back at all. Her savings are actually lost, and seemed like a big gamble. And she was very, very excited about her daughter becoming a doctor. It was very much a woman-led household, and she really wanted her daughter to have a better life. She was a very bright student. Looks like, as long as she planned her life well, at least let's say in the city of Ahmedabad or Baroda, it was within striking distance. Uh, this customer actually, when she moved from a chit fund to our financial solution, Kaleido Goals, the first thing that happened for her was that her daughter was still in school, and she had annual tuition fees to pay. She also now had, in addition, because she was actually literally going to coaching classes, etc., those, all of those are upfront paid, and they're quite expensive. So she would encounter these big cash flow deficit months where she would need um, to actually get her money out. And in an LIC policy, money is completely illiquid. You can't touch it until the policy term. So when she switched, this was one of the first things she said, that your credit line that you gave me, along with the savings product, which is a no questions asked credit line, really helped because I could actually, you know, take the money out, make sure I put my daughter in the coaching class, so she has an even better sense. My business will be good in Dashera Diwali in any case. I know I will be able to make it up. And she repaid the loan. That small credit line she took, she repaid the loan in 4 or 5 months. Very, very short dated. She really didn't need it for that long. It was there exactly for the amount of time. So her savings helped her create a track record, which helped her get an emergency credit. Her daughter, actually took the coaching class. And recently, we actually heard that her daughter actually got into medical school. And she was able to see one of her big goals, big dreams come true. And it was really heartening to see how finance can really play a role if used well in people's lives. So, yeah, I mean, that of course is the real motivation, I think, probably for all of us.
That's wonderful to hear. So we just got time for maybe one more such nice story. Murthy,
What I would say is that all this has resulted in two things from a customer's point of view: is ease of doing business and transparency. And what I mean by ease of doing business is that, say, for example, if it is a group-led, a loan program, what used to earlier happen is that you used to sit and teach the customer to sign if assumingly the customer didn't know how to sign. And there was an effort. It was an intimidating process for a customer who doesn't know. She might feel embarrassed and all that stuff. Or many of the people, they don't like putting a thumb impression. Now with the e-documentation that is happening, I think what has happened is that the amount of time that you actually spent in terms of teaching a customer to sign, you are using it far more productive. Sorry, you are sorry. You are using that time far more productively to speak about others relevant things than to do a transactional aspect. Point number one. The second, from a transparency point of view, there are two things that I would like to share is that all these documents, though they were being given as a physical paper, today with the My KGFS app, these documents are getting digitized and the customer can actually look at the documents anytime, anywhere, whenever the customer would like to see that, yes, this is my document, this is my repayment schedule, this is what the terms and conditions of the loan agreement are. So from a transparency point of view, you are able to show. The second part, which is the last thing that I would say in the interest of the time, there are many more things. The minute a payment is made, unlike a normal SMS, what we do is we send a voice-based SMS, which goes as a call. And that actually real time it goes. So the customer knows what is it that the customer has paid, how much has it been adjusted, what is the balance that is left, what is the interest that is there, and how much more is left. So there is a level of confidence that it gets created. So be it in terms of a digital transaction or be it in terms of a real hard cash collection that happens. So the ease of doing business and transparency is something where customers really have got benefited.
No, thank you very much. I'm sorry, I think we have almost run out of time, but but it has been great to hear all of you. I think while we have made over the last few years, starting with possibly demonetization and then the pandemic, I think the pace of digitization in the country has really sort of gone up. Thanks to the underlying infrastructure created by NPCI and the government in terms of the Aadhaar, the UPI and others. Obviously, India is leapfrogging our digital transformation journey ahead of many other countries, and I think which is there. But as you correctly mentioned that, I think there's a long way to go. I think statistics sometimes is very misleading, while the numbers are going up from 1 billion to 4 billion a month, but actual number of users are still very less. Digital transformation of organizations, and it's a partnership. I think organizations like yourself, fintechs, microfinance institutions, financial services providers, the whole ecosystem participants, account aggregators, would really have to work in tandem to ensure that we continue to deliver the digital transformation journey, which ultimately affects millions and millions of underserved population. And I think very correctly so. This is a journey which will not happen overnight, but thankfully, I think we are making very solid and positive steps thanks to some of the initiatives which have been taken by the government and the organizations like NPCI. When we look personally at digital transformation, there are various facets of where organizations themselves would have to ensure that they also do their bit, whether how to address the technology legacy infrastructure side, how do you sort of reorient your organizations to ensure that there's a strong focus on innovation, and and also I think we also seen that as part of the digital transform organization, every organization should provide a fail-safe place where innovations is encouraged, thrived, and all failures are not really sort of looked down upon, because I think every single work which we do, there is failures before there's a success. So I think culturally we need to, as an organization, sort of adapt or embrace innovation, and this thing, that's only when we can do it. But at the end of the day, I think when we hear stories like what Sucharita or Murthy is mentioning, it makes our day to say that some of the work which we are doing, I think really is impacting, positively impacting the lives of millions and millions of people who are not as privileged as many of us. So with that, thank you very much, all of you. And thanks to Access for providing a platform for us to come together and, sharing our common, themes, understanding, and experiences. And wish you all good day. And thank you all of you who have taken time to join this panel and participated in this session. Thank you very much. Over to you, Priyanka.
Thank you so much, Shantanu, and thank you all the panelists for this very important discussion. And thank you to the audience who have logged in. We had around 202 people who had logged in for this session. We will take a quick short break before we reconvene at 2:20 for another technical session titled Designing Gender-Focused Financial Inclusion Strategies and Action. I would request everybody to log in again at 2:20. Thank you so much.
Thank you. Thank you very much.